The opening of global exchange centers and the rising buzz around the Iraqi dinar and Vietnamese dong introduction for decades. A passionate community of investors has been waiting for a single defining moment: the recognition of the Iraqi dinar and Vietnamese dong as currencies with the potential to rise far above their current valuations. These investors have endured skepticism, mockery, and frustration. They've held onto their notes with hope, often told they were chasing dreams that would never come true. And then, almost overnight, the landscape changed. Nearly 200 official exchange centers have opened their doors across the globe. Unlike the small, unregulated money changers found on street corners, these are legitimate, structured, and licensed facilities, fully prepared to handle the verification, storage, and exchange of dinar and dong. For the first time in years, the community has something concrete to point to: physical infrastructure that validates their belief that these currencies might soon gain recognition and legitimacy on a larger scale. This development alone would be enough to spark excitement, but the timing makes it even more significant. Just as these exchange centers opened, Iraq's prime minister went on record with comments that strongly implied the dinar is undervalued compared to Iraq's economic strength. The combination of these two events has shaken the global currency community like never before. But what do they mean, and why is this moment so different from the countless rumors and speculation of the past? The power of tangible infrastructure. For years, the story of the dinar and dong has lived primarily in online forums, speculative blogs, and conference calls. Investors often had little to show outsiders, except stacks of foreign notes and promises of future change. Skeptics dismissed the entire movement as a fringe investment scheme, arguing that if the currencies truly held value, governments and financial institutions would already have taken action. That's why the appearance of nearly 200 exchange centers worldwide is so pivotal. These centers aren't operating in secrecy; they are official, licensed, and globally connected. Their very existence is a rebuttal to years of skepticism. Institutions don't spend time and resources creating brick-and-mortar facilities without reason. They require planning, coordination, compliance with regulations, and substantial financial investment. This isn't something that happens casually. When such infrastructure appears on a global scale, investors see it as more than coincidence. They see signs of preparation. The facilities are designed not only for small retail exchanges, but for large-scale transactions and secure storage. This suggests anticipation of a demand far greater than routine tourism-related currency swaps. To seasoned observers, it looks like the groundwork for something transformative. The Prime Minister's words, "A catalyst for hope." Infrastructure alone might not have been enough to ignite the current wave of optimism. But Iraq's Prime Minister added fuel to the fire with remarks that many interpreted as a direct acknowledgement of the dinar's undervaluation. His comments weren't casual remarks buried in an obscure speech. They were delivered clearly and intentionally, with reference to Iraq's substantial financial reserves, robust oil production, and long-term economic strategy. He did not outright declare a revaluation, but the subtext was powerful. For years, currency holders have been told that Iraq's fundamentals justify a stronger currency, but hearing it from the nation's leader gives that belief new legitimacy. Investors who had long been dismissed as dreamers now feel validated. The acknowledgement transforms the narrative from mere speculation into semi-official recognition. The impact of this cannot be overstated. When a government's highest office acknowledges a potential misalignment between the currency's value and the nation's economic strength, it shifts the conversation. It forces economists, global institutions, and even skeptics to take a closer look. Iraq's economic strength versus the dinar's value. The Prime Minister's comments touched on a glaring discrepancy that has long puzzled economists. Why Iraq's currency remains so weak despite strong fundamentals. Iraq holds the world's fifth-largest proven oil reserves, steadily increasing production, and billions in foreign investment. Its natural resources put it in the same league as countries like Saudi Arabia, whose currency is far stronger and more stable. Yet the dinar continues to trade at suppressed levels. Many argue that this undervaluation is not due to weak fundamentals, but to political and institutional factors. Iraq's long history of conflict, sanctions, and external influence has kept the currency from reflecting its true economic weight. Acknowledgement of this misalignment by the Prime Minister adds weight to the argument that the dinar could eventually rise. It doesn't guarantee revaluation, but it validates the idea that change is possible, and perhaps even likely, when the political and economic conditions align. Why this moment feels different. Skeptics are quick to point out that rumors of revaluation have circulated for over a decade. Countless predictions of imminent change have come and gone, leaving many investors disillusioned. Why should this moment be considered any different? The answer lies in the confluence of three unprecedented factors. 1. Physical infrastructure. The sudden, coordinated opening of nearly 200 global exchange centers gives credibility and practicality to the idea of large-scale transactions. 2. Political acknowledgement. Iraq's prime minister directly addressing the undervaluation of the dinar gives legitimacy to what was once dismissed as wishful thinking. 3. Economic fundamentals. Iraq's resources and investment climate continue to strengthen, making the argument for a stronger dinar more compelling. When these elements come together, they create a scenario that feels more concrete and less speculative. For the first time, the story has moved beyond online chatter and into the realm of physical preparation and political discourse. The Vietnamese dong. Another piece of the puzzle, the Vietnamese dong adds another layer of intrigue to this story. Vietnam has transformed itself into a manufacturing powerhouse over the past 2 decades. Its exports are booming, foreign investment is flowing in, and the economy is among the fastest growing in Asia. Yet, like Iraq, its currency remains undervalued, though in Vietnam's case, this is partly intentional. Vietnam has kept the dong weak to ensure its exports remain competitive in the global market. Economists agree that if Vietnam allowed its currency to float freely, it would likely rise. By including the dong in these newly opened exchange centers, observers suspect that Vietnam may also be preparing for a shift. The fact that both dinar and dong are being supported by these facilities suggests coordination and perhaps a broader regional or global financial strategy. The role of politics and timing. Of course, currency revaluation is never just about economics. It is also deeply tied to politics, timing, and international relations. Iraq, in particular, has had to navigate a complex landscape of sanctions, regional tensions, and global oversight from institutions like the International Monetary Fund. Even if Iraq's fundamentals support a stronger dinar, the timing of any move would depend on alignment between domestic stability, regional dynamics, and global acceptance. That's why revaluation has always been unpredictable. What seems inevitable from an economic standpoint may be delayed indefinitely by political realities. The opening of exchange centers, however, suggests that some of those political and institutional hurdles may be easing, or at least being prepared for. Such infrastructure is unlikely to be created without at least tacit approval from multiple levels of authority. The emotional journey of investors for longtime holders of dinar and dong, this moment feels like vindication. Many have endured ridicule from friends, financial advisors, and even family members. They've been told repeatedly that their investment is nothing more than a scam. The lack of visible progress has tested their patience and, in some cases, cost them financially through inflation and lost opportunities. Now, with physical infrastructure and political acknowledgement, they finally have something to point to, evidence that their belief wasn't entirely unfounded. For these investors, this is more than just financial speculation. It is the culmination of years of emotional endurance. The sense of hope, validation, and renewed excitement is palpable. Caution amid excitement, yet, even in the midst of optimism, caution is necessary. History is filled with examples of speculative frenzies that failed to materialize as expected. The opening of exchange centers and political comments are significant, but they do not guarantee immediate or dramatic revaluation. Investors must remain aware of the risks and avoid being swept away by hype. The future could bring a dramatic revaluation, a gradual adjustment, or simply greater legitimacy in the exchange process. The exact outcome remains uncertain. What is undeniable, however, is that the story has entered a new phase, one marked by real infrastructure, official acknowledgement, and serious global attention. The opening of nearly 200 official exchange centers and the remarks of Iraq's prime minister have transformed the conversation around the Iraqi dinar and Vietnamese dong. For the first time, The narrative has shifted from speculative rumors to tangible preparation and political recognition. Whether this leads to immediate revaluation or a slower evolution remains unknown. But one thing is clear. The community of investors, once ridiculed for holding onto worthless paper, now has a reason to believe that their patience may one day be rewarded. This is not the end of the story. It is the beginning of a new chapter. And as infrastructure, politics, and economics converge, the journey from speculation to reality seems closer than ever before. The broader implications of a potential dinar and dong revaluation introduction, the story of the Iraqi dinar and Vietnamese dong, has always been more than just a tale of numbers on a currency chart. It is about geopolitics, global economics, investor psychology, and the delicate interplay between hope and skepticism. Section 1 explored the opening of nearly 200 exchange centers worldwide and the Iraqi Prime Minister's acknowledgement of undervaluation, both of which have given new credibility to longtime holders of these currencies. But while these developments mark a turning point, they also raise critical questions. What would revaluation actually mean for Iraq, Vietnam, and the world? Who stands to benefit the most? What risks remain hidden beneath the optimism? And how should investors, governments, and global institutions prepare for a potential shift? This second section unpacks those questions, examining the possible scenarios, risks, and consequences of a revaluation. It also looks at the broader context, how these moves could reshape regional dynamics, affect global markets, and alter the lives of millions of investors who have waited for this moment for decades. The economic logic behind revaluation. Iraq's position. Iraq is not a fragile economy. Despite decades of war, sanctions, and political instability, the nation sits on vast oil reserves, fifth largest in the world. Oil accounts for the majority of its GDP and government revenue, and production has been steadily increasing. Alongside energy, Iraq holds significant reserves of foreign currency and gold, giving it a strong financial base. In theory, such wealth should translate into a stronger currency. Countries with comparable oil reserves, like Saudi Arabia, maintain exchange rates that reflect their energy-driven economies. Iraq's dinar, however, lingers at artificially suppressed levels, a relic of sanctions and international restrictions. Correcting this imbalance would not only make sense economically, but could also enhance Iraq's credibility on the global financial stage. Vietnam's position. Vietnam tells a different story, though one equally compelling. Over the past 2 decades, Vietnam has evolved into a manufacturing and export powerhouse. Global companies rely on Vietnam for textiles, electronics, and other goods. Its trade surplus has been growing, foreign investment continues to flow in, and GDP growth rates have consistently outpaced regional averages. Yet the dong remains weak, intentionally so. The Vietnamese government has kept its currency undervalued to maintain export competitiveness. By keeping the dong cheap, Vietnam ensures its goods remain attractive in global markets. However, as the economy matures, pressure grows to let the dong appreciate. If exchange centers are preparing for a shift, it suggests that Vietnam, too, may be inching toward a new currency reality. Potential scenarios of change. 1. A dramatic overnight revaluation. This is the scenario most often envisioned by optimistic investors. In this version of events, Iraq or Vietnam, or both, announce a sudden, significant increase in currency value. Holders of dinar or dong would see their investments skyrocket overnight. Pros: immediate recognition of the currency's true value, instant wealth for investors, and a dramatic shift in global financial headlines. Cons: such sudden moves could destabilize local economies, trigger inflationary pressures, and invite backlash from international institutions like the IMF. Iraq and Vietnam would have to carefully manage the consequences, both domestically and internationally. 2. A gradual adjustment. A more cautious approach would be to allow the currencies to rise slowly over time, either through managed appreciation or by loosening exchange controls. Pros: allows governments to control the pace of change, minimizing shocks to the economy and giving institutions time to adjust. Cons: investors hoping for sudden wealth may be disappointed. The process could take years, testing patience once again. 3. Greater legitimacy without full revaluation. Another possibility is that the exchange centers exist primarily to provide legitimacy and structure for currency holders. This might mean easier ways to buy, sell, or store dinar and dong without an immediate dramatic change in value. Pros: provides credibility to the currencies, improves liquidity, and reduces the scam stigma. Cons: may frustrate investors expecting revaluation. The currencies might remain undervalued for longer. Risks and challenges: political instability in Iraq has made progress, but remains politically fragile. Sectarian divisions, corruption, and regional conflicts still threaten its stability. Any major currency shift would require confidence in the government's ability to manage its economy and financial system. Without political stability, revaluation risks being undermined by internal chaos. Vietnam's balancing act: Vietnam's economic model has thrived on an undervalued currency. A sharp revaluation could hurt exporters and disrupt the very foundation of its growth strategy. The government would need to balance pressure from global partners, who want a fair currency value, with the risk of weakening its competitive edge. Global institutional oversight: institutions like the IMF, World Bank, and WTO play significant roles in shaping currency policy. Sudden unilateral moves by Iraq or Vietnam could invite scrutiny, resistance, or even sanctions if they are perceived as destabilizing global markets. Investor psychology: the emotional roller coaster of dinar and dong speculation has already lasted years. If hopes are once again raised and then dashed, the backlash could be severe. Distrust in institutions and governments could deepen, further polarizing communities of believers and skeptics. Global implications: regional dynamics in the Middle East. A stronger Iraqi dinar would signal Iraq's emergence as a more stable, economically credible power in the region. This could alter its relationship with neighbors like Saudi Arabia, Iran, and Turkey. It might also attract greater foreign investment, diversifying Iraq's economy beyond oil. Southeast Asia's position: if Vietnam allows its dong to rise, it could shift the balance of manufacturing competitiveness in Asia. Countries like Bangladesh, Cambodia, and even China could feel the ripple effects. A stronger dong might also encourage Vietnam to accelerate its transition from low-cost manufacturing to higher-value industries. Impact on global markets: currency revaluations of this scale would not go unnoticed by global financial markets. Investors, hedge funds, and multinational corporations would need to adjust their strategies. For example, oil markets could be affected if Iraq's stronger dinar influences pricing strategies. Trade flows could shift if Vietnam's exports become more expensive. Emerging market funds might see opportunities or risks, depending on how these revaluations unfold. The psychology of long-time holders: for those who have held onto dinar and dong for years, this journey has been deeply emotional. Many bought in after hearing stories of potential revaluation, often from friends or online communities. Some invested small sums, others poured life savings into the hope of future wealth. They've endured cycles of rumor, disappointment, and renewed hope. Some have been called gullible, others stubborn. For many, this is no longer just an investment. It is a test of patience, belief, and resilience. The opening of exchange centers and political acknowledgement has breathed new life into that hope. Yet with that comes the risk of renewed heartbreak if expectations are not met. The community stands at a crossroads between validation and disillusionment. Cautionary lessons from history: currency revaluations are rare but not unheard of. Historical examples provide both inspiration and warning. Kuwait, 1991. After the Gulf War, Kuwait reinstated its dinar's value, rewarding those who held onto it during the crisis. This story often fuels dinar holders' optimism. China's yuan, 2005. After years of being pegged to the dollar, China allowed gradual appreciation. It did not produce overnight riches, but it did reshape global trade. Zimbabwe, 2009. A cautionary tale, where hyperinflation rendered the currency worthless and forced the country to abandon it altogether. These examples show that while revaluation is possible, outcomes vary widely depending on political, economic, and institutional factors. Why the exchange centers matter most at the heart of this entire story is the establishment of nearly 200 global exchange centers. Regardless of whether revaluation happens quickly, slowly, or not at all, The creation of such infrastructure is unprecedented. It signals seriousness and preparation. It provides legitimacy to currencies long dismissed as speculative fantasies. Even if the dinar and dong remain undervalued for now, the existence of these centers ensures that investors have a structured, safe, and credible way to transact. This alone shifts the conversation from fringe speculation to mainstream acknowledgement. Looking ahead, if, when, and how, the ultimate question remains, will the dinar and dong revalue, and if so, when? The honest answer is that no one knows with certainty. The pieces of the puzzle are aligning: economic strength, political acknowledgement, and physical infrastructure, but timing is unpredictable. What can be said is this: the story is no longer just rumor-driven, it has tangible evidence behind it. Governments and institutions rarely build infrastructure without reason. Investors must balance hope with caution, optimism with skepticism. Whether the future brings sudden wealth, gradual change, or simply greater legitimacy, one fact is undeniable: the narrative has entered a new, more serious chapter. Conclusion: the journey of the Iraqi dinar and Vietnamese dong is far from over. With nearly 200 exchange centers, now open worldwide, and political leaders acknowledging undervaluation, the stage is set for something significant. Yet the outcome remains uncertain. Dramatic overnight revaluation, gradual adjustment, or increased legitimacy without drastic change, all are possible. For investors, the key is to recognize both the opportunity and the risk. For Iraq and Vietnam, the challenge is to balance domestic needs with global expectations. For the world, the potential shift in these currencies could reshape regional and global dynamics. Above all, what makes this moment unprecedented is not just speculation, but preparation. Real, physical, coordinated preparation on a global scale. That alone has changed the conversation from if to when. The story of the dinar and dong has always been about patience, belief, and resilience. Today, it is also about possibility. The future is unwritten, but for the first time in decades, it feels closer than ever before. Disclaimer: all content provided by IQD Global Intel is for educational and informational purposes only. We are not financial advisors and do not provide investment, trading, or banking advice. Viewers should always conduct their own research and consult with a licensed financial advisor before making any financial decisions.